Well, let's get more from Andrew Brenner. He's listened to one or two Fed speeches in his time. He's vice chairman at Natalliance Securities. Andrew, thanks very much indeed for joining us.
Always a pleasure. Thanks for having me. What
was your takeaway? Is Powell trying to prepare us for a cut next month?
Absolutely. You know, Powell could have taken a middle of the road posture, and he decided to come out and be particularly dovish. That sent 2-year, 3-year, and 5-year yields down lower in yield by more than double digits, 11 basis points. So that is bull steepening the U.S. Treasury curve. Even the 10-year is doing better, down about 7 basis points to 4.25. So he absolutely prepared us. And as you just said, you know, we're up on the Dow, we're up on the S&P, we're up on the NASDAQ. But in reality, the big winner today is the Russell 2000, up almost 4%, double what the NASDAQ is up. So we continue to see a little bit of rotation to smaller stocks. Smaller stocks have a higher correlation with lower interest rates. So yes, the market is anticipating this. Odds for September, which had been as low as 65, 66% chance early today before Powell spoke, went up to about 94, now is about 87, 88. And we're building in a little over 2 cuts. We still think there are going to be 3 cuts this year. There is no question in our mind that the employment situation in the U.S. is serious and it's weakening, and that is much more concerning to Powell than a few tenths one way or the other with tariff-based inflation.
So you think we'll get 3 cuts from the Fed this year?
I do. I think all 3 meetings will have 25 basis point cuts. I don't see the reason to do 50 in September. I don't see any reason to not to do 25 in October. But for right now, what we need is we still have 2 more employment reports and a whole BLS revision for the whole year that are coming out September 5th and September 9th, respectively. So we're going to see a lot of information as far as employment goes. And I think that weakening is going to cause the Fed to cut 3 times this year.
One thing that kind of surprised me was that people would be buying bonds, pushing down the yield. Isn't that kind of unusual? I mean, a dovish Fed could stimulate inflation.
Well, a dovish Fed could stimulate inflation, but, you know, the Fed is still very much in restricted territory. We're not at 2% interest rates. We're at 4.25 to 4.5.
Right.
So he's got plenty of room to go down to 3.5, which I think is the fair value of where the short-term interest rates should be. And yeah, yes, you're right. It could, he's talking about reducing rates, and we're only seeing the 10-year better by 6 or 7 basis points. I think the long end is going to continue to struggle. I think the long end is going to be concerned about inflation, but the reality is the employment situation is not good. The revisions that we had finally in July where the Department of Labor is starting to catch up with reality. I just can't believe how bad those numbers were. You know, they were talking 150, 190,000, and they revised them to 14 and 19 respectively. I mean, you're talking about different countries. So, I mean, the reality is that the labor part of this country is doing much worse. And the second reality is that Powell is basing a lot of his reason not to go further down in interest rates, lowering interest rates, is the fact that the unemployment rate has stayed steady at 4.2%. The unemployment rate is dramatically affected by immigration. And I don't think anyone has the immigration aspect of labor modeled correctly. A lot of people just don't know where the immigrants are right now. I mean, they're still in the United States, they're not working, so on and so forth. So I think that the unemployment rate is vastly higher than the 4.2 that is being indicated. And I think that's another reason the Fed will ease 3 times this year alone.
Do you think is Jay Powell, presumably his job, he won't be renewed by President Trump. Is there any prospect that he'll be squeezed out, though, prematurely?
Is there any chance he'll be squeezed out before his term ends in May? Yes, there's a small chance. I don't think it is going to happen. If Trump had the ability to do it, he would have done it by now. He does not have the legal authority to do that. So not only do I think Jay Powell will finish his chairman term, which will end the end of May, Jay Powell has another year and a half that he can stay on the Fed till January of 2028. Everyone assumes that he'll drop off the Fed as soon as his chairmanship ends. But I think he's so concerned about the independence of the Fed, and he's worried about giving Trump too many slots inside the Fed, that I think Powell will stay for his full term to January of 2028. That's where I'm a little different than most.
That's interesting. All right. What about your view, Andrew? I mean, is the Fed's independence, its credibility under threat here with Trump's pronouncements?
The threat of the Fed is under siege, and it's not so much Trump's pronouncements; it's his ability to fill people that I don't think are really the right people for the Fed. I mean, Steve Moran he's got a good academic record, but I don't think he's Fed material. And unfortunately, I think he'll probably get in, but that will just be one. And if Powell stays, that will be one that Trump cannot get in. And then, of course, you saw all the headlines this morning, Lisa Cook, where someone actually started screaming at her as soon as she walked in to Jackson Hole, please, you got to resign. And they removed that person via the sheriffs of Wyoming. So, I mean, there's a lot of, and Trump, right in the middle of Powell's speech, said he's going to fire, if Lisa Cook doesn't resign, he's going to fire her. Now, I don't believe he has the ability to do that, but he has a stronger case than he does with Powell. So we'll have to wait and see. So, yeah, I think the Fed's independence is under siege, but it's under siege because of the what Trump will do to putting new people in there who want to totally turn around how the Fed works. And I believe that the president wants to have the Fed monetize the deficit. And while I think that makes sense to a small amount, that is not good for the long-term independence of the Fed.
And Andy, we could talk to you all day. Thank you very much indeed for giving us the time.
Thank you very much. Have a great weekend.
You too. Andrew Brenner, Vice Chairman at Natalliance Securities.